Building a resilient investment mindset. Hey everyone, welcome back to Finance Clarity. Let me ask you something important. If the stock market dropped 30% or even 50% tomorrow, how would you react? Would you panic and sell everything? Would you feel sick to your stomach every time you checked your portfolio? Or would you stay calm, stick to your plan, and maybe even see it as an opportunity? Here's the reality that most people don't want to admit. The biggest factor that determines your long-term investment success is not how smart you are, how much you know about finance, or even which investments you pick. It's how you behave during difficult times. Markets will always be volatile. There will always be crashes, corrections, recessions, and periods of uncertainty. The investors who do well over decades are usually not the ones who predict these events correctly. They're the ones who have built a resilient investment mindset. The ability to stay disciplined, patient, and rational even when things feel scary. In this video, I'm going to show you exactly how to build a resilient investment mindset. I'll explain what it really means, why it matters so much, and practical steps you can take to develop it. If you want to invest with more confidence and less emotional stress, stick around. This might be one of the most valuable skills you can develop as an investor. Let's get into it. What does a resilient investment mindset actually mean? A resilient investment mindset is the ability to stay calm, disciplined, and focused on your long-term goals despite market volatility, uncertainty, and emotional pressure. It doesn't mean you never feel fear or doubt. Everyone feels those things. It means you've developed the mental strength to not let those emotions control your decisions. People with a resilient investment mindset tend to stay invested during market downturns instead of panic selling. Avoid chasing hot investments out of FOMO. Stick to their long-term plan, even when short-term results are disappointing. View market volatility as normal rather than something to fear. Focus on process and behavior rather than short-term outcomes. This mindset is one of the biggest differences between investors who succeed over the long term and those who struggle or give up. Why most investors struggle with their mindset. Investing is emotionally difficult for several reasons. Markets are inherently uncertain and unpredictable. Losses feel much more painful than equivalent gains feel good. We're constantly exposed to news, opinions, and noise that can trigger emotional reactions. Our brains are wired for short-term thinking, but good investing requires long-term thinking. Social media and financial media often amplify fear and greed. Because of these factors, even intelligent and well-informed people often make poor investment decisions driven by emotion rather than logic. This is why building a resilient mindset is so important. Without it, even the best investment strategy can fail due to poor behavior. Key principles of a resilient investment mindset. Here are the core principles that form a strong investment mindset. 1. Accept volatility as normal. Markets go up and down. This is not a bug. It's how investing works. A resilient investor expects volatility and is mentally prepared for it. 2. Focus on process over outcomes. Instead of obsessing over short-term returns, focus on following a good process consistently. Good long-term results usually come from good behavior over time. 3. Think in long-time horizons. Resilient investors think in decades, not days or weeks. This helps them stay calm during short-term market movements. 4. Separate your emotions from your decisions. You can feel fear or excitement without letting those feelings drive your actions. Awareness is the first step to better decision-making. 5. Understand that you can't control everything. You can't control market returns, but you can control your savings rate, costs, behavior, and time horizon. Focusing on what you can control reduces stress and improves results. 6. View setbacks as part of the journey. Market crashes, corrections, and periods of underperformance are normal. Resilient investors see them as temporary rather than permanent failures. Practical ways to build a resilient investment mindset. Here are actionable steps you can take. 1. Develop a clear investment plan. Write down your goals, time horizon, risk tolerance, and strategy. Having a written plan makes it easier to stay disciplined when emotions run high. 2. Automate your investing. Set up automatic investments. This removes the emotional decision of when to buy and helps you stay consistent through all market conditions. 3. Limit how often you check your portfolio. Constantly monitoring your investments increases emotional reactions. Try checking only once a month or once a quarter. 4. Study market history. Understanding that markets have always recovered from crashes and downturns can help you stay calmer during difficult periods. History doesn't guarantee future results, but it provides perspective. 5. Focus on your own goals. Stop comparing your portfolio or progress to others. Everyone has different goals, time horizons, and risk tolerances. Focus on your own plan. 6. Practice emotional awareness. When you feel strong emotions about your investments, pause and ask yourself, am I making this decision based on logic or emotion right now? 7. Build systems and rules. Create simple rules for yourself. For example, I will not sell investments unless my original investment thesis has changed. Or, I will not check my portfolio more than once a week. 8. Zoom out regularly. When markets are volatile, look at long-term charts instead of daily or weekly movements. This helps put short-term noise into perspective. Common challenges and how to overcome them. Here are some common difficulties people face and how to handle them. Challenge. Feeling anxious during market drops. Solution. Remind yourself that volatility is normal. Review your long-term plan and remember why you invested in the first place. Consider reducing how often you check your portfolio. Challenge. Wanting to chase hot investments. Solution. Have clear investment criteria. Only invest in things that fit your strategy, not because everyone else is talking about them. Challenge. Regretting past decisions. Solution. Accept that you will make mistakes. Focus on what you can learn from them rather than dwelling on regret. Use past mistakes to improve your future decisions. Challenge. Feeling like you're falling behind. Solution. Stop comparing yourself to others. Focus on your own progress and what you can control. The role of patience and long-term thinking. One of the most important traits of a resilient investor is patience. Good investing often feels boring. It involves long periods of doing nothing while markets fluctuate. Many people struggle with this because they want excitement or quick results. However, the investors who build real wealth over time are usually the ones who are willing to be patient and consistent. They understand that wealth is built slowly through compounding, not through constant action or trying to time the market. Developing patience is one of the most powerful things you can do to build a resilient investment mindset. Final thoughts. Building a resilient investment mindset is one of the most valuable things you can do as an investor. Markets will always be uncertain and emotional. Your ability to stay calm, disciplined, and focused on the long term will have a bigger impact on your results than almost anything else. This mindset doesn't develop overnight. It takes time, self-awareness, and a commitment to thinking differently about investing. But the effort is worth it. The investors who succeed over decades are rarely the ones who are the smartest or who pick the best investments every time. They're usually the ones who have developed the mental strength to stick with a good plan through all market conditions. If you can build this kind of resilience, you'll already be ahead of most investors, not because you're better at predicting the future, but because you're better at managing yourself. Thanks for watching. If this video helped you understand how to build a more resilient investment mindset, please like and subscribe for more practical investing content. Drop a comment below and let me know what challenges you face when it comes to staying disciplined with your investments. I read every comment. I'll see you in the next video. Take care.